So everybody's gradually shifting their dollar investments to gold. It's going to take time because they are not going to rush it and drive the price too fast up. But it's happening, and it's happening day by day. And on top of that, now, for the first time, we're seeing major investment banks or investment managers recommending gold at a very high level. And that, of course, a whole investment community will follow. I mean, they're all lemmings, that nobody, you should buy an asset when it's underpriced, undervalued, and unloved, but still has real value.
Amid growing volatility in global markets, seasoned wealth preservation expert Egon von Greyers is sounding the alarm on what he sees as the accelerating breakdown of the current monetary system. Drawing on over 2 decades of experience in precious metals, von Greyers emphasizes that the recent surge in gold and silver prices is not a speculative rally, but a reflection of the long-term devaluation of fiat currencies. He notes that gold's rise from $300 in the early 2000s to over 13 times that value today is not about gold becoming more valuable, but about paper money losing its purchasing power. He recalls that his firm moved heavily into gold in the early 2000s when central banks were selling and systemic risks were already mounting, including rising global debt and derivatives exposure. Their strategy was simple but bold: preserve wealth outside the banking system by holding physical gold in secure, allocated storage. Today, von Greyers believes the global financial system is approaching a tipping point. With less than 0.5% of global financial assets currently allocated to gold, he predicts a major shift is underway. He points to a significant milestone. Morgan Stanley's chief investment officer recently recommended a 20% gold allocation, an unprecedented move from a major institutional player. For von Greyers, this signals the beginning of a broader revaluation of gold and silver as foundational stores of value. As central banks, particularly in non-Western nations, increase their gold reserves and reduce exposure to the US dollar, he argues that the world is entering a new era where tangible assets will once again anchor the financial system. In his view, the sun is setting on a Western-led, debt-driven economic model, and rising in the East, led by nations that understand the enduring role of gold in protecting national and individual wealth. Now, let's dive into the clips to hear these insights firsthand. Don't forget to like and share if you find this valuable. Your support helps spread the word.
The US is losing its financial and economic power totally. They're massively indebted. The dollar is declining. It's going to continue to decline. Not in a straight line, nothing does. But with that economy and that amount of debt, the power is shifting, and we've been saying this for many years. It's shifting from west to east. It's shifting to Asia, to southern countries. It's shifting to the BRICS countries, and the powerful nations in the coming, I don't know how long, at least 50, 100 years, will be China, India, a lot of Asian countries, and Russia, of course. Nobody likes Russia today in the West, but remember, Russia has about $85 trillion of natural resources. They are extremely powerful, and no countries can be sanctioned forever or be at war forever. So and what has happened, of course, is also that Europe and the US has driven Russia, China, North Korea, Iran together as a very strong entity. And this has been happening gradually, but seeing them meeting in China recently and holding hands, this was a real sign to Trump and to the US and to the European leaders, who are all very weak and just want to make war to be important, although they have no chance in any war from the point of view of weapons or money. Or even armies, but they still want they have problems at home, and then that's when you start a war. So, but the Eastern countries or the BRICS countries, they are going to be so much more powerful than the Western countries, which are all in decline, and therefore this is where the future lies, and they understand the importance of gold. I mean, they all hold a lot of gold. Some of their trading or trade between countries, etc., will be settled in gold in the future. The balances will be settled in gold, and of course, when we talk about now central banks buying gold more than ever, this is of course started, as you indicated. This started with the sanctions by the U.S. and Europe of Russia, and the confiscation or freezing of the Russian dollar assets. No one's going to put any assets, especially not central banks, reserve assets into dollars anymore, because they're at risk. So everybody's gradually shifting their dollar investments to gold. It's going to take time because they are not going to rush it and drive the price too fast up. But it's happening, and it's happening day by day. And on top of that, now for the first time, we're seeing major investment banks or investment managers recommending gold at a very high level. And that of course a whole investment community will follow. I mean, they're all lemmings, that nobody, you should buy an asset when it's underpriced, undervalued, and unloved, but still has real value. And this is of course what we did in the beginning of the 2000s, when we bought gold in a major way at $300. So people will ask now, is it too late? A lot of people have been waiting. There'll be a correction. Everybody's waiting for the 2008 correction. It won't happen. It's not the same today. Today there is a fundamental shift away from the West to the East, to countries who understand gold and the importance of gold, and who hold gold to a much greater extent than the US. US probably doesn't have anywhere near the 8,000 tons, whilst China, Russia, and many of these countries probably will have a lot more gold than they are officially declaring. So this is where the power is going, and as I said, the investment community will follow the money. It has always followed the money, and the money goes. The center of money is now moving to the east. It's not going to happen overnight. Of course, the New York and London, etc., are still powerful, but they've built up an empire on debt, and the future world economy will be based on commodities, real values, and proper trading, not on funny money and on derivatives and massive leverage, etc. So that's they'll be good for the world and bad for the West. The West is in a decline, which will, as I said, all empires when they die. I mean, it takes a long time to die. They started already a long time ago, but it will continue whilst the sun in the east is rising gradually but strongly.
Alasdair MacLeod has long emphasized the strategic significance of gold accumulation by Eastern nations, highlighting it as a deliberate and transformative shift in the global monetary landscape. According to MacLeod, countries in Asia and the BRICS bloc are aggressively building their gold reserves as a safeguard against the vulnerabilities of the US dollar and the broader fiat currency system. This accumulation is not driven by speculative motives but by a clear understanding of gold's role as a stable store of value and a hedge against economic instability. MacLeod points out that these nations are positioning themselves to reduce their reliance on the dollar-dominated financial system, anticipating a future where gold underpins international trade and acts as a cornerstone of monetary sovereignty. MacLeod further warns that this eastward accumulation of gold could accelerate the decline of Western financial dominance, particularly as the US and Europe grapple with mounting debt and weakening currencies. The concentration of gold reserves in Eastern hands strengthens their geopolitical influence, providing them with both economic leverage and a form of monetary independence. This shift challenges the existing global order, suggesting a transition toward a multipolar system where gold-backed currencies or settlements become increasingly prevalent. For MacLeod, the implications are clear. As Eastern powers continue to amass gold, the balance of economic power will tilt, reshaping global trade dynamics and forcing Western nations to reconsider their monetary strategies in response to a fundamentally altered financial environment.
In the case of gold, China has more or less cornered the gold market. I put out a note today analyzing how much gold China actually has, China and her citizens. And, if you want to read it, you can pick it up on my Substack. But I reckon, and I'm fairly confident of these figures, that China has something like 75,500 tons between it and its citizens. Bear in mind that it's been accumulating this since 1983. So we're talking about over a long period of time. Also, in a big bear market between 1983 and 2002. And it was at a time when we were selling gold hugely. I mean, both we were selling not only our gold as investors, but also the central banks were selling gold. And not only were they selling gold, but people were taking delivery of gold, leased gold, and selling it into the market and putting the funds into US treasuries. And the gold disappeared. Guess who was buying it? China. I mean, the point is that if you look at the above ground stocks of around about 200,000 tons, look at how much gold China has got. We're looking at 36% of all above ground stock. It's leaving everybody else short. It's a short answer. And so we're seeing the squeeze now. And, the major US banks, amongst others, are beginning to get bullish on gold. And they manage portfolios which have no gold. And, at the moment, while, the Magnificent Seven are soaring and, credit bubble is intact, perhaps underlying investors don't care too much. But when that pops, and they've got no gold, they'll be looking at a very, very different situation. And I think that these banks are beginning to realize that they've got to have some gold. But if you look at just adding to the 0.5% which global portfolios own of physical gold, if you take that up by 1%, they've got to find 25,000 tons at current prices. It's not there. It is not there. And this buying is going to happen. Of that, there is absolutely no doubt whatsoever. So what we're seeing at the moment, which might be terribly exciting for the bulls, gold rushing up to 3,900 and, looking as people forecasting it's going to go 4,300 or whatever. That's just the start of it. This is actually, I think, a crisis developing within the precious metals market. And what we see in gold, we're also seeing in silver. The story in silver is obviously different, but China, again, has been a big player in silver as one of the leading global mining nations. Not only that, but over a long period of time, they've been importing silver doré, refining it, hanging on to silver, but using their clout to keep the price suppressed. That's no longer happening. So we've got shortages developing in silver now too, as far as Western capital markets are concerned. I mean, the fact is that pricing of these things is no longer under our control. It's all gone on Shanghai. And what we're seeing the squeeze on the establishment, the people who are short, not just establishment. I mean, if you look at the commitment of traders figures, you'll find that even managed funds have short positions. I mean, they're net long, but they've still got some short positions. The swaps, obviously, big net short, the liabilities that are mounting up on the shorts are just staggering, absolutely staggering. So, yeah, it's a squeeze on the system. And I think actually, Danny, what we're looking at, if you stand back, we're looking at the dying days of the fiat currency system. And, that basically means that after a period of time, it doesn't matter don't know how long it'll be, but I suspect it won't be all that long. Unless governments actually manage to pin their currencies to gold, they'll become valueless. They'll go down to close to zero. I really can't see the politicians even thinking that they need to protect their currencies. They're, they're still spendthrifts. They're still, having huge, great deficits on their budgets. They don't care. They just complain that the markets need higher interest rates. Well, it's hardly surprising. You're going to need higher interest rates still. And meanwhile, everybody in the market, in this credit bubble, assumes that inflation is going to diminish. But I mean, the thing they get wrong is it's not, sort of prices, if you like, in that sense. It's the loss of purchasing power of the currency. That's what they've got to look out for. And if I'm right that we are in the dying days of the fiat currency system, then prices are going to soar in the next 2 years. And that is something which, of course, nobody expects. But it won't be prices going up. It'll be the value of currencies going down, their purchasing power collapsing. And, of course, as soon as people realize that, they dump currency for anything they can get with it. I think that's...
Looking ahead, the continued gold accumulation by Eastern nations is likely to have profound and far-reaching effects on the global financial system. As these countries bolster their reserves, gold could increasingly serve as the foundation for new monetary frameworks, reducing dependence on the US dollar and challenging its status as the world's primary reserve currency. This shift may accelerate the development of alternative payment systems and trade settlements denominated in gold or gold-backed currencies, fostering greater financial independence for emerging economies and reshaping global trade patterns. Moreover, the growing demand for physical gold from these major economies could lead to tighter supply conditions, driving prices significantly higher over the medium to long term. This would not only impact investment markets but also influence central bank policies worldwide, prompting other nations, including those in the West, to reconsider their gold holdings to maintain economic stability and credibility. Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.